Assalamualaikum warahmatullahi wabarakatuh. We are from Group 2 and in this presentation, we will present our input from our fraud case research of the Luckin coffee.
Hi, my name is Syazwani and in this presentation I will present about the Luckin China background. So Luckin was founded in June 2017 and has quickly emerged as China's fastest growing coffee company. The founder, Jenny Chan, opened the first store in Beijing in October 2017. After a successful trial period, Luckin began its expansion in the early 2018. Then from January 2018 to March 2019, Luckin growth was explosive. Luckin was filed for US IPO and becoming one of the fastest business to reach the unicorn status in China. As all the transactions had to be made through the Luckin app, the company was almost entirely cashless.
Assalamualaikum warahmatullahi wabarakatuh. My name is Hanny, Suraya, and I will be presenting the chronology fraud of Luckin Coffee. In January 2018, Luckin Coffee, co-founded by CEO Kian Zia, the former Chief Operating Officer of car rental firm, and two other senior executives, officially started operation in Beijing and Shanghai. In June 2018, Luckin raised 200 million in its maiden fundraising round, which valued the startup at 1 billion and made it one of the quickest firms to reach unicorn status in China. Investors included Singapore Sovereign Wealth Fund (GIC), Chinese investment firm Centurium Capital, and Joy Capital. On November 2018, Luckin raised 200 million here in its second funding round, which increased the company's valuation to 2.2 billion. While in April 2018, Luckin raised 150 million in a pre-IPO fundraising round from investors including BlackRock, which valued the company at 2.9 billion. May 2018, Luckin priced its US initial public offering at 17 per share and raised 645 million after fully exercising the greenshoe option. The float was the second biggest US IPO by a Chinese firm last year, according to Refinitiv. In December 2019, Luckin overtook Starbucks as China's biggest coffee chain by number of stores. Luckin said it had just over 4,500 stores, achieving a goal it set 1 year ago and topping Starbucks, which had only 4,100. On January 2020, Luckin expanded into vending machine to sell freshly brewed hot beverage and snacks, seeking even more of the China market. It also completed a follow-on share sale and a convertible bond worth a combined 980 million. Unfortunately, on February 2020, short seller Muddy Water Research shorted the Luckin stock, citing an anonymous report that questioned the coffee chain's financials. However, Luckin called the report's methodology flawed and denied all allegations. On April 2020, Luckin said on April 2 that an internal investigation had shown its chief operating officer Jian Liu and other employees fabricated sale transactions. Its shares fell as much as 81% in New York on Tuesday, wiping 5 billion off its market capitalization. That is all from me. I will pass to the next presenter. Thank you.
Assalamualaikum and a very good day everyone. My name is Sabrina, matric number 280-34, and now I will continue with our group presentation with the fundamental principles of an auditor referring to our fraud case. First of all, we realize that an auditor must be independent both in fact and in appearance. This is because an auditor needs to ensure that a fair and a true record from a company financial performance report is being generated. They are expected to provide an unbiased and professional review. On the other side, Being integrity as an auditor require you to investigate and find evidence to prove the suspicious elements in the financial statement rather than do nothing. However, in Luckin's case, the lack of these fundamental principles causing their internal audit committee failed to comply with the auditor code of ethics. This is because there were 12 employees who worked and involved with the 3 schemes of fraud, including the COO and also the CEO. But they choose to keep silent. They should have prevented this fraud risk, but worse, they also cooperated with the fraud scheme. This act may be influenced by self-interest threat of fundamental principles, where they might be offered with a sum of gifts, hospitality, and else. The next one is objectivity. Objectivity is concerned with reasons and motivations behind certain decisions or behavior. Rather than list of restrictions, it is focused with interior mental process. The auditors who adhere to the principle of objectivity will not allow to be biased, conflicts of interest, or undue influence from others to sway their professional judgment or corporate decisions. On the other hand, in Luckin's fraud issue, there was a business operations database that showed the actual transactions of sales, redemptions, and orders. Yet, a fake database comprising the fabricated transaction was used to prepare the false financial statements. The financial departments only had access to the fictitious database and was unable to verify the transaction's accuracy. The internal auditors not merely failed to recognize the irregular transactions, but they also helped to fabricate the company's performance in the financial statement.
My name is Sofia Syaranee, metric number 280493, and I will continue with this presentation with the lack of responsibility as an auditor, focusing on the point of discovering material misstatement due to fraud or error. An auditor is required by International Standard on Accounting ISA 240 to perform procedures to obtain and evaluate information which is used to identify the risk of material misstatement that could result to a fraud. In the case of Luckin Coffee, the Internal Audit Committee is made up of members of the board directors, which is in charge of overseeing accounting accuracy and compliance procedures, along with ensuring that the internal controls are in place to avoid incorrect accounting. However, in this case, the Internal Audit Committee did not perform due diligence and did not examine the falsified transaction, despite such an obvious evidence of abnormal figures are presented in the financial statements. Next, they purposely did not truly investigate and did not try to prove the fraud, as they are also involved in the 3 scheme of the Luckin fraud, but worse, they handed over the control to the management, which is entrusted to provide accounting information and financial data to the board of directors. This misconduct has caused the members of Luckin's former auditor, Tian Rupo and Son Shaw, to resign from the board in June 2020. The issue was later found out by the external auditor when they managed to figure out some evidence where the managers has been fabricating revenue and expenses transactions. That's all from me. Thank you.
Assalamualaikum and hi everyone. My name is Aliah Puteri Binti Kamarudin with a metric number of 280644, and I'll be continue presenting about the effects of the Luckin fraud. And one of the effects of the Luckin fraud that I'll be presenting is the share prices sank approximately to 81%. After the fraud cases, the consumers also tend to lose interest for the company that leads to the demand of the share decrease. Luckin's share price fell to $6.4 following the announcement of the internet probe. During the deception, Luckin has raised more than $864 million from equity and debt stakeholders. According to SEC, Luckin's financial deception has harmed other Chinese companies listed in the United States. Not only the listed companies but also their shareholders' equity, making it much more difficult for the non-listed companies. Next, the effects of the Luckin fraud is there have been penalties and fines. Luckin was alleged by the SEC with making false representations regarding the sales, cost and net loss from April 2019 to January 2020 in order to mislead investors about the Luckin's business performance. However, Luckin flatly disputed the charges, stating that the corporation will take appropriate measures to preserve itself against the unsubstantiated, ungrounded and faulty allegations. An internal investigation revealed that the chief operational officer of the organization and the other employees forged around $310 million in the sales of 2019, or about 40% of the yearly sales forecast by analysts, which led to the outcomes of the financial fraud. The SEC concluded its inquiry and imposed a fine on Luckin amounted to 180 million in monetary policies, and fraud was widely disseminated in Chinese and worldwide media, with Forbes stating that the company's transaction has been prone to fraud.
Hi, my name is Najihah Binti Sahdan 280278. I will proceed with effect on Luckin fraud to auditors. Auditor must always consider the consequences for the entire audition detects fraud. The auditor should refer the case to management level if found resulting false statement to the financial statements. To determine the impact on the financial statement and auditor's report, the auditor should discuss the issue with an appropriate manager. For example, in this case, 2 members of Luckin former audit committee had resigned from the board in June 2020 because they failed to perform diligence and dubbed the fabricated transactions. Instead, the committee decided to hand over control to management. Next, for suggested solution that the internal control must be in place to prevent wrongdoing at Luckin are: first, there should be a safeguard in place to ensure that sales are only recorded when they occur. This can be accomplished by reconciling the cost of goods sold with the inventory on hand on a regular basis. Second, internal control must be done to make sure that such adjustment on any entries that overturn at the start of the following year do not pass. Third, there should be inspection in order to ensure that the asset listed in financial statement are in fact present by physically inspecting the stock and fixed asset and obtaining balance verification from debtors. Fourth, that should be guaranteed that invoices are created properly by accurately recording the rates for various items. The rate of products sold may have been reported improperly in addition to increase sales revenue. And lastly, cash should be physically confirmed with cash record and books at periodic times. Caution should be given to ensure that cash expenses were actually incurred and no false entries.
As for the conclusion, even though Luckin overtook Starbucks as China's biggest coffee chain, it doesn't mean there is no fraud happening in this company. So, as mentioned in the chronology, in April 2020, Luckin mentioned that some of the employees are fabricating sales transactions. This action actually occurred. The company's shares went down by approximately 81%, and not only that, Luckin was pressed with a fine that amounted to $180 million in monetary penalties. Also, the members of the Luckin Audit Committee decided to resign from the board as they failed to adopt the fabricated transactions. So based on this case, some solutions have been suggested to prevent this kind of fraud happening again in the future. As the major fraud is report misstatement, there should be safeguard in place to ensure that every sales recorded only when they occur, and the company should guarantee that the invoices are properly created. Internal controls and inspection also should be done. And lastly, cash should be confirmed physically with cash records and books at periodic times. That's all from us. Thank you so much.